Hey, this is Chris from Conservative Roots, and I figured I'd take this time to do what I can to shed some light on the Rockwall ISD voter approved tax rate election coming up here. I know the early voting starts tomorrow, and I'm doing this here at kind of the last second. But I spent the last, I don't know, week or so kind of digging into how I guess the M&O piece of school finance works, or at least one tiny part of it. And school finance, as I'm kind of finding out, is not to my surprise really, but it's just one tiny piece of a multifaceted um, area, right? You could spend probably several lifetimes learning about school finance, and we'll talk about that here in a second. But I figured I'd do what I can to understand it. Currently on furlough from the government as a humble civic servant, and got nothing else to do, and so trying to use my time wisely to do something that might help a few people understand school finance, or at least understand the rate that a lot of us are going to be voting on. I figured, we did kind of rebrand the group, and I wanted to set the tone here correctly. The things that we're trying to conserve here are our American values and American virtue, which are inherently Christian. And in light of that, I'd like to set the tone by giving thanks to God and offering a word of prayer. So, if you would join me in a word of prayer. Holy God, we thank you for providing us with education, that we have places to send our children to learn and gain knowledge and to enjoy the many options we have for such things in this country. We thank you for our leaders, teachers, and administrators and ask for your blessing on them, and that you grant those tasked with carrying out those duties and everything involved in the function of our education system the wisdom needed to carry out the responsibilities you've given them in a way that is honorable. And we also ask you provide us with wisdom as voters, and that we give thoughtful consideration to the responsibilities you've granted us. And we ask that you help us to be diligent to serve our community according to our ability, and for your glory, all for your glory and praise, and help us to seek you in the name of Jesus. Amen. All right, so I'm going to go ahead and provide an overview of the results, because we've been going on for a little while now, and I feel like if I don't do that, at least if I haven't lost you already, you're probably going to be out of here really soon, right? So here's an overview of the results, and you're going to have to watch the video to see all the details. Hopefully you'll stick with it, or maybe you'll just flip through it, but here you go. So I calculated recapture, and I came out to about 3 million. So recapture occurred, I think, due to Rockwall ISD's local share of Tier 2, Level 2 M&O collections being greater than the state-determined Tier 2, Level 2 entitlement. And this is driven by the new revenue. And what that actually means, you're going to have to watch the video to determine that. And we'll get into all the details, of course. You'll see the video is quite long, um, but that's the result. But the net revenue, despite recapture, should be somewhere around 15.5 million greater than last year's. And just as a check on our totals, the total calculated revenue is almost exact with the ISD's budgeted amount within 0.03%. So at least we know the totals from which we're working from are probably correct. And I'm not sure about the methodology, but at least those are right, I think. Um, I also provided a comparison between the total tax amounts at the very end between the current rate and this proposed rate, and the difference in total taxes. And I provided an analysis of the overall tax environment throughout Rockwall ISD for different areas in the county under various taxing authorities. And I show the overall tax impact over 5 years based on average taxable values. So it takes homestead exemptions throughout those 5 years into consideration, while also showing the relationship of the changes in those values and our tax rates. And so you're going to have to watch the video for the details on all of that. And I apologize because this is not a short video. It is not an easy video to watch. Certainly not an easy video to listen to. My voice is super dry. I apologize for that. I put myself to sleep sometimes, but I try to explain it so that a regular person like myself can understand it. So that's one reason why it's so long. Half of it is listening to myself battle through some of this data and trying to just understand it. A few disclaimers: I am not a Rockwall ISD voter, so I don't have a dog in this fight. There's some pros and cons to that, of course. But yeah, I'm in Roy City ISD, and so I'm just trying to help my neighbor, even though they kick our butts in football, which is kind of rude. But yeah, in case you didn't pick up on this from earlier, I come from a very conservative point of view, but I try to make this as palatable as possible, so that everyone can get something out of it. And I try to let the data speak for itself. So if I don't, to my conservative friends out there, if I don't sound as conservative as usual, well, my bad. I guess you can just deal with it. I come from an accounting and auditing background, but I am definitely not a school finance guy. So hopefully I didn't screw anything up royally. If I did, I'm going to go ahead and apologize in advance. Let me know where I messed up, and I'll do my best to fix it. So let's get into it. All right. So here's step one in trying to figure this all out. And before we begin, I want to just say that I'm actually doing this section over again. Not so much because I did it, I guess, incorrectly the first time, although I did do that, I guess, a couple of times. And I did it over again before then as well. But more so because as I was editing, I realized, gosh, it just sounds absolutely terrible. There's something about like the translation, and I guess due to technology, maybe, I don't know, and the way that it just sounds if you don't bring a little bit more energy. And it was just so incredibly boring, and there's a little bit more like dead space in the way I was saying things, and it was just really bad, basically, is what I'm trying to say. And I'm going to try to avoid some of that. So, I drink copious amounts of coffee to try to make up for some of that. I don't make videos for a living, okay? I don't do any of this kind of stuff, right, for a living. Actually, here we start on this tab. So I just wanted to point all that out. And so I'm doing it over again so that I can, for one, make the video a little bit shorter, because it is a long video, and kind of explain things a little bit better, a little bit faster, and hopefully keep you a little bit more engaged than last time. So this is step one. This is a report called the tax rate and MCR template. You can get this off of, I think, the comptroller's website. You should be able to also get it off of TEA's website. And what you do is you enter the CDN number, and it just auto-populates this information in the lighter cells. And the information in the darker cells is the information it wants you to plug in yourself. Okay, and so this is step one of understanding this process of school tax. You plug in the CDN. I don't know what CDN stands for. It's something number, but our CDN for Rockwall ISD is 199901. So we plug that in, and what it does is it pulls in data from hidden tabs, which we can unhide. It has these, you can see these tabs right here: instructions, LBVS, which is, I guess, local property values, maybe. I'm not sure what the S stands for. Calculation. And I put the numbers 2 because I was switching between a model for our proposed M&O rate and a model that would have been what the ISD probably would have used to set the rate itself for the proposed rate. We're using it for a slightly different purpose, to demonstrate the impact, right? So we're editing it a little bit, and I'll show you. We'll get into that here in just a minute. So we're not using it for its intended purpose, and we'll show you here in a second. But first, this will help us understand the concept of this copper and gold penny dynamic, which is important in understanding how the tier 2 funding dynamic as well. And that's what the whole concept of recapture that everybody's worried about is kind of surrounds. So let's just go through this line by line. I'll try to be quick about it. I'll try not to keep it too, I'll try not to make it too boring. It's boring regardless, okay? You're just gonna have to accept that. For me, it's not so much, but you know, 'cause I kind of like this stuff to begin with, but I'm just kind of weird like that. Anyways, so 2024 value lost to local optional homestead exemptions. So the district actually has the option to offer additional homestead exemption if they wanted to. And I didn't know that this was a thing until recently. I never heard of it. I've never heard of any district doing this. It's kind of cool. I wish they would. I don't really see it happening. You know, you're kind of asking the district to give itself less money, and they're always in need of funding, right? So I don't really see that happening, but essentially it's pulling in that amount that would have occurred in 2024. And 2024's comptroller tax values for M&O purposes. So if you go onto the county's, what's it called, CAD, the County Appraisal District, you'll see in each appraisal or in each taxing entity's, I guess, sheet, right? They have an INS, an interest in sinking, and an M&O and maintenance and operation side of things, right? And so it's pulling in the M&O side from 2024, the property values associated with that. Usually they're the same between the two, so far as I've seen. But I guess they could be different. Under what circumstances they're different, I'm not really sure, but I suppose they could be different for various reasons. All right, so it's just pulling in that information from this tax data tab. And it's using this VLOOKUP formula. I'll punch into the cell so you can kind of see where it's pulling from sometimes because it's color coded and you know it's nice to see where it's coming from. 2024, so okay, this is the same thing as above, but it's adjusted based off of the taxable value, right? So now we're adjusting things based off of this baseline value, and it's adjusting for homestead exemptions. So in 2024, we had a $100,000 homestead exemption for home sites, and then a $10,000 homestead exemption for elderly and disabled. And that's what it's adjusting for. And then for 2025, it's asking us to do the same thing. So this is the first value that we've plugged in, that I plugged in, I guess. And where I got this information from is the county CADs. And there's 3 counties that contribute to Rockwall ISD. And I thought there were only 2 for a while, and I happened to come across Collin County, which actually adds to the district as well, and I didn't know that at first. And so what I did is I went to the county CADs, and for Rockwall ISD, which obviously adds the most, Kaufman County CAD, which because of Heath, right? We have a high school in Heath, and so that adds another big number, not as much, but a sizable amount. And then Collin County CAD, and there's the rest of it. And so that's where these numbers are coming from. And I just added this in there for some reason. But yeah, if you want to know where that's coming from, you go on the county appraisal district's website. You can download these certified totals. They have one for summaries, one for totals. You download the totals, you just look at the Rockwall ISD page, and there's several pages worth that show you data for Rockwall ISD, and that'll show you that same information. All right. So local property value growth. So this will show you 2024's property value over 2025's property value, right? We're trying to calculate the growth. That's what it's doing there. Correction, I said that backwards. 2025 over 2024 will give you the growth, right? And so you subtract 1 to get the growth rate. And you know, just show you kind of an example of that without subtracting one, just to show you the math. Math is fun, right? And so that's our growth rate used for M&O purposes. And it's probably the same for INS. Usually the rates are the same on the CAD side of things, or not the rates, but the property values. Okay, so again, we're pulling data from the tax tab on these. VLOOKUP is just a referencing formula, right? And it's just pulling from a different tab is all it's doing. Property values subject to limitations on appraised value, chapter 113. I have no idea what that is. Oh yeah, I did write it. I did look into it. So I guess there was new business incentives, and those expired in 2020. But it could be that some businesses were grandfathered in, I suppose. But for this year, it's zero, and we already know this data, and it's just pulling it in. Chapter 311, I'm not sure. We don't really care. It's zero anyways. Exemption. Okay, so we're just adding. This is zero, and we're just adding up the zeros. So again, we're at zero. No big deal there. Next, it's asking us the growth rate, and it adds in those zeros. So again, we're still at the same growth rate, nothing to add. And for 2025, again, there is no additional exemption that we're expecting. So we're just plugging in a zero. And we're adding in those additional exemptions, which are still zero. All right. So the template kind of on its own is calculating an estimated comptroller value for M&O purposes for tier 2. Tier 2 is simply the how do I say this? I want to make sure I say it right. The copper and gold pennies. That is the property tax, but as it relates to I guess the maximum the MCR compressed rate, right? As opposed to tier 1 funding, which is based off of our basic allotment, which is based off of our student population. And so it's estimating our 2025 comptroller certified values, which is taking the growth rate here and dividing it by last year's property value and taking away, I guess, the additional exemptions, I suppose. I think that's what it's doing. Yeah, but it's not taking anything away because it's zero. Okay, sorry, already short-circuiting my brain here, which is admittedly not hard to do. So there's that. But yeah, it's automated. It's doing all the work, and we don't really have to worry about it, thankfully. All right. So next, it's trying to figure out which max compressed rate we need to use. And so there's 3 options, and we'll go through each one. This is the prior year's 2024 max compressed rate, which is again pulling from this tax data tab. Well, actually, it might be pulling from this one. No, it's tax data. Okay, yeah. Pulling from here, and we'll look at the tax data tab because this is where we kind of deviated from what the district would have used to calculate the new rate, the proposed rate. But for our purposes, we plugged in the proposed rate, but that doesn't pick up until the next tab. We didn't mess with 2024's MCR. So the max compressed rate controls the maintenance and operations M&O side of property tax, and we call it compressed because it's lower than the established rates, right? It acts as a limiter. Both sometimes it acts as a limiter to make sure you don't go too low, which we'll see. All right, so that's option 1, 2024's MCR. Next is the local preliminary MCR, which you have a few options. It's either last year's MCR or the local MCR based off of an assumption of a 2.5% growth rate. So we add up all the district property values, we multiply by this TA determined growth rate, and then we express it in MCR terms by this valuation amount. That's why it's multiplying by this cell here, D31, and dividing it by the estimated property value. And then we're just rounding it to 4, right, to express it as a per $100 valuation. All right. And so it's taking either or. It's taking the minimum, right, the lesser of the two. And so the higher value turned out to be 0.6209 per $100 valuation. And so it's reverting back to 2024's. All right, so that's our local preliminary MCR. Next is our state compressed percentage. Compression percentage. Okay, so let me make this a little bit bigger. So the 2025 MCR kind of serves as the upper limit. The TA determined MCR limit for Tier 1 funding. So again, Tier 1 funding has to do with our student population. It includes our basic allotment through our foundation school program. And the basic allotment is our, oh gosh, I'm trying to remember. It's a set amount basically per student, right? That doesn't change very often historically. And then you multiply that, or you add to it a little bit, something called a guaranteed yield. So you add to it slightly, and that changes year to year. I think this year it's like $55, well, for 2026. And then, so once it's added to, you multiply it by the weighted average daily attendance. And so the average daily attendance is weighted by various weights based on a number of factors that we're not going to even look at. We're not going to get into all that today, or maybe ever. I don't know. I'm not a school finance guy. But yeah, we have the number for it, and really that's all that matters. So going back to this, 2025 MCR is the upper limit. And so the MCR, I'm already short-circuiting here. The TA determined MCR limit for Tier 1 funding, i.e. our basic allotment via the FFSP, or max allowed MCR. So we start at a baseline of 0.6855, so the state determined rate. And then we have our allowable 2.5% growth assumption, or our limiter, over statewide growth of 5.6. So the state grew, I guess, last year, I suppose, I think is what it's trying to say. Last year it grew statewide 5.6. So the allowed growth assumption is 2.5. So I think the intent is to keep the MCR from going off the rails, I think is what it's trying to do. And then we have a reduction factor, and we'll punch into the cell to show you what it looks like. But the reduction factor is actually this adjusted MCR. And so you see this preliminary MCR that's determined right here. Well, whenever the preliminary MCR throughout Texas is less than 90%, so it's like more than 10% off, what ends up happening is that the TA, the Texas Education Administration, effectively saves money. But when that happens, it needs to go back and reallocate those funds back to the district or districts, and that's essentially what it's doing by reducing the MCR, I think. And so essentially, it's giving those cost savings back to the district, I think. Sometimes accounting stuff is opposite the way that you think it, but I think that's what's going on. And so here is the formula that it's using. It's taking the minimum, so the lesser of either the state rate, which is this 0.6855 per $100 valuation, and it's rounding down to 4, right? And then we're multiplying that rate times the 2.5% growth over the statewide growth, and then we're reducing it by that factor. And that gives us our state compressed rate. Excuse me. Throat's getting dry. All right. And then finally we have our lower limit MCR, right? Because we don't want to go too low. Heaven forbid we don't have a tax. We have to have a tax. So 2025 limitation on max compressed rate is simple math. We just take this rate right here, also determined by the state, I think, and we take 90% of it. Boom, round it to 4 is all we're doing. All right, so to get our MCR for this year, what we do is we take the lesser of the state local compressed rate subject to limitation under section 48. Well, I'm not even going to read that because nobody knows what this means. I don't know what this means. But what it does is it selects the highest of either the state max MCR or the local max MCR, whichever is lower, or the 2025 state minimum MCR, if that made any sense. So it's taking the highest overall, but within that, it's taking the minimum right here of these two. So it wants either the minimum of this state MCR or the local MCR, preliminary MCR. Or it wants the max, and so once it determines this, which is 6.69, it's going to take the minimum between these two, which is still 6169, and we come out to 6169, which is again our compressed rate. Compressed once again because it's lower than the rate set by the district, and that's what we're going to apply to our property tax, or to our property values rather. I'm already losing it. That's what this is the rate we're going to apply to our property values, so that and that's what's going to help us get to our tier 1 allotment. And so that helps us get there. The state makes up for the rest of it. We'll see that here in a second, but one thing at a time. All right, so that's step 1A. Whoops, that's step 1A, and we'll go into step 1B. But before we do, let's get into what I adjusted to adjust this template for our purposes. All right, so this is the hidden tab, one of the hidden tabs. We have 3. I'll show the other ones real quick. I didn't mess with this one. This is local property values. It's already given us this data. There's other districts in here. I did just make it look a little nicer. I put like some color in here. I put a filter on there, and I just filtered for Rockwall is all I did. Chapter 311 and 313, it's just data, not a whole lot. Tax data. So again, I put some color in here. I color coded it by the color that it shows when you punch into our main cell that we're going to look at, golden pennies and copper pennies. And so I tried to make it nicer and readable is all. And then I, want to demonstrate each relevant cell. And so, those are the adjustments I made. And for our purposes, the biggest adjustment is I put in our M&O rate, our proposed M&O rate, into the M&O rate cell for Rockwall ISD, because for our purposes, I wanted to plug in our M&O rate to see what the effect does. We want to see how many copper pennies and how many golden pennies are in play so that we can kind of know whether or not recapture is on the table. That's the whole point. That's what everybody's worried about. So that's what we're trying to do. But first, I kind of want to show you an example. Well, we'll come back to this. We'll come back to this. I don't want to get too ahead of myself. So we plugged in our proposed M&O rate. This looks up what we just calculated. So here, I'll just show you. Plug this in. Go to the next cell. This is a VLOOKUP. VLOOKUP is just a referencing formula. It looks up from a different tab. And it's looking up the tab that we were just at, this LPVVS. We calculated this rate. And so it's looking that up and pulling it in here. This Tier 1 tax rate was already here. We're not messing with that. I think it's just 2024's tax rate. All right, MCR difference. There is no difference because in our scenario, there's no growth. Allowed M&O rate, it's just doing that formula. It's going to be the same as the proposed. Whoops. Oh my gosh. Sorry, I got all these boxes around. So it's taken our M&O rate plus our MCR difference, which is 0, right? So there's nothing to add. All right, golden pennies. Golden pennies describes the amount of funding that isn't subject to recapture. So I'm guessing that's why it gets its name, because you get to keep all of the funding. There's no funding that goes back to TEA due to golden pennies. It protects it. It protects the funding. It's golden. And so per the formula, it takes either the minimum of 8 cents, 8 pennies, or the difference between the allowed M&O rate, which is still just the same as the proposed in our scenario, and the difference between the M&O rate and the MCR, which in our case, that minimum is still just 8 pennies. All right, so we have our golden pennies. So this is funding not subject to recapture. And then our copper pennies takes the lesser of the allowed M&O minus MCR minus golden pennies, or 9 copper pennies, or 9 pennies. And that's what we call our copper pennies. So this is funding that is subject to recapture. So they take back a portion of it. And by the way, Tier 1 funding also is subject to recapture under limited circumstances. What those are exactly, I'm not really sure. We'll talk about that later. But for now, the copper pennies are the ones that are subject to recapture, and that's what we're focusing on, kind of. So yeah, that's what's going on here. So for our scenario, we plugged in the proposed M&O rate, and we just do some math checks. That's all it's saying over here. Nothing much to talk about. And so we go to the next tab, step 1B. So it's pulling in that proposed rate, and this is where we deviate from the intended purposes of this template to demonstrate the golden pennies and copper pennies. Okay, sorry about that. The application I'm using, Clipchamp, is great, but it's free, and because it's free, it limits you to 30 minutes, and I didn't realize I was at my time. So, new clip here. I was a little bit thrown off at first because I was looking at my unadjusted tax info version of the same template, just for comparison purposes, right? I wanted to keep a unsanitized, I guess, maybe that's the wrong term, I don't know, version of the same thing. And it was throwing me off because, let me go to that. It was throwing me off because the M&O rate wasn't the same as what Rockwall's established rate was, and it was thrown. I was like, what the heck? We got 66.69. It's supposed to be 66.92, and I see that this is the district's allowed rate, and it has a little disclaimer here that says, if your district received an adjustment under TEC, under this law, in tax year 24, then the allowed rate, not the adopted rate, is used for the purposes of determining 2025's total M&O rate with no increase. So if the 2024 adopted rate is incorrect, please contact blah, blah, blah. Yeah. So what it's essentially saying is the allowed rate is lower than what was adopted, I guess. I don't know the intricacies of what that actually means. Was the MCR actually levied at this rate? I don't know. But for the purposes of what's allowed for setting the new rate, right? The limiters, I guess, is a good way of saying it. That the established M&O from last year is too high, and so it's taking it back down. That's not to say that they levied taxes not in accordance with law or anything. This is the rate that they established, which you add up the proposed rate and the INS rate at the time. You get the total rate, which it's right here. I don't know why I put the marker over there, but yep, this is the total rate for 2024-25 school year. Okay, it was just throwing me off. I was like, well, that's not right. Anyways, back to our other template. So back to seeing the effects of the proposed M&O. All right, so for our purposes, we're impacting the rate, not determining the VATR. And so it's pulling in the proposed rate. It's pulling in our calculated MCR. It's giving us what it calculated, the golden pennies. And it refers to the golden pennies, this part of the rate that is protected funding for the district. Also, it refers to this as Tier 1, Level 1. I'm sorry, I'm already messing things up. Tier 2, Level 1. And it refers to the copper pennies, this part of the rate that isn't protected from recapture, refers to it as Tier 2, Level 2. And it's, again, pulling from the tax data tab. And then unequalized pennies, I think this has to do with the dynamic between the district's rate and Austin's. I'm not really sure. It's 0, so who cares? But I'm not sure how that dynamic works. If someone wants to explain it, go for it. And so the 2025 total M&O rate with no increase is this calculation right here, and it's just the sum of the MCR and the golden pennies minus the disaster response rate, which is 0. I think it's supposed to be 0. Again, if I screw that up, my apologies. But yeah, and that's the formula. Okay, so again, we're really not using this side of the template. We're not using it for the purposes that this is intended to, but just for our own benefit to understand the template. It's pulling in the max compressed rate onto this side of things. It's showing us the Tier 2 tax rate, which is all of Tier 2, which is going to also include the unequalized pennies, and it's going to take away 2024's, I guess, additional rate due to disaster response. Okay, so 17 pennies are in there as part of the rate that is subject to Tier 2 funding. So basically our MCR, our rate, the rate that isn't part of our MCR is 17 pennies. So this part of our template, if we end up having a negative number, I think what this is doing is it adds 5 cents back in to keep the district from going too low. So it's taking the max of 0. So if we end up having a positive number in this calculation, which contributes to our voter approved tax rate, if this number is positive in any way, it's going to be 0 because the formula is telling us a max of 0. Or it's allowing for a negative number, but it's limiting that by adding 5 to it, 5 cents to it. It's positive 5 cents. So if we had, for whatever reason, so this is where I was going to go back and demonstrate tax data and show, like, let's say hypothetically the district wanted to set the rate to like 5869. That'd be awesome. Everyone would cheer for joy. We would have negative copper pennies, right? No gold pennies. I think it's limited to 5. I think we get 5 no matter what. Well, so yeah. So essentially, we have to protect some of the funding, I think, is the idea behind this. And so we're giving all the golden pennies protection, and we're giving the district the benefit of all the golden penny protection. And so we're adding that in there. And so we're saying out of this rate, out of the MCR, we're adding in 8 pennies, so that 8 cents for every $100 valuation is protected funding for the district, because they have to have some funding, some additional funding on top of the MCR, and it has to be protected so that the district, or so that TA doesn't take it back. I think is the idea behind that. So just as an example, that's what it's doing here on this template. So again, we have limiters to make sure that our rate isn't too low and that our rate isn't too high. Oh, go back to 7. All right. Okay. So again, I don't think there's any disaster response rate adopted for 2025. Hopefully not. Hopefully I didn't ruin this template. And then the INS tax rate for 2025 is here. We plug that in, and this reconciles to the adopted rate that's up for vote. Or I'm sorry, yeah, I think it's considered the adopted rate, right? So it's up for vote, but still adopted by the district, right, by the school board, and it's taking the lesser of the unequalized plus gold over copper pennies, or I'm sorry, plus gold and copper pennies. I probably shouldn't have put that dash there because it kind of signifies division, but I didn't mean it like that. So gold and copper pennies plus the INS rate, or the sum of, I guess I just didn't finish my sentence. I think I meant to say it down here and I ran out of room. It doesn't let you adjust this. So let me just remove this confusion here. So the VATR equals the lesser of the unequalized rate plus the gold and copper pennies plus the INS, or the sum of the MCR plus tax year 24 tier 2 rate plus the 5 pennies plus disaster response plus INS. In this case, because of the way we're using this template, both are the same. So here is the formula for that. You can pause it, take it all in. It's so beautiful. Not really. All right. So clear as mud. I know I went through this kind of fast, but if I don't add a little pep in my step in the way that I talk, it sounds, I'm telling you, it sounds so bad. It's so bad. And I have to have to talk this way. I don't normally talk like this. I talk very slow and very dry, and it doesn't work for videos. It just doesn't. And yeah, sorry. All right. One more thing I wanted to cover. How much time do I have on this thing? What am I at? Does it not tell me? I don't think it tells me. That's great. Weird. I guess it'll just cut me off when I'm done and I'll start up another clip. Fun times. Anyways, MCR. I wanted to go over gold and copper pennies, the concept itself, and how that we didn't even have to talk about it to the extent that we did. It's just if you understand the concept itself, you can actually think about this a lot less than what we did already. So the first 6, I think it's 6, could be 5. I'm not 100% sure, but from what I've read, the first 6 pennies are automatically available to the district and no election is required. The last 2 golden pennies, so pennies cents 7 and 8, are require a VATR election. So as an example, our MCR is 6169 right here. So an example of a no VATR election rate would be 6769. I'm sorry, did I say this right? 6169. Yeah. Anyways, so an example of a no VATR rate or no VATR election rate would be 6169 plus 6 cents gives us 6769. And when we get into VATR election territory, we add those extra 2 golden pennies. So these are pennies still protected. The district gets all the funding from this, but we're increasing the rate such that, well, now we need an election. Well, I guess if it increases by 1, so we're getting either 1 to 2 pennies, puts us into election territory. So I used all 2 pennies, but I suppose it only takes 1 more to get into election territory. So really, it is just 1 more. So let me fix this. Whoop, there you go. So 61.69 plus our 6 cents plus 1 more cent, we get 68.69. Gives us a VATR election. Then our rate would be 68.69, but we know that's not the case. We know that our proposed rate's higher, so instinctively we should know, just by understanding this concept, whether the proposed rate should trigger VATR and recapture. We're kind of on the edge of it, right? We know already that Rockwall is a pretty wealthy district property-wise, one of the wealthiest, I think, in all of Texas, which is cool. You know, it's nice for Rockwall. But we also know that it comes with the cost in terms of, TEA. The district keeps all funding from gold pennies. Increases after that up to 9 cents are subject to recapture, in which part of these funds are sent back to TEA and given to less funded districts. So in this case, we can know that the district is proposing the additional 2 cents because it adds up to the proposed rate. So 78.69 is what's being proposed. We have our MCR plus our additional gold. It's our 6 cents of gold pennies, which wouldn't trigger a VATR election, plus our 2 pennies that would trigger a VATR election. And I color coded these in gold because they're golden pennies. And then our copper pennies that would also trigger a VATR election. And these all add up to our proposed M&O. So all we really need to do is to take the proposed M&O rate and subtract it by, well, I guess it's this one. Subtract it by our calculated MCR, and if it comes out to 17 pennies, well, we know we should know at least that, yeah, we're probably getting into recapture territory. And, you can make an argument for recapture, I think, based on the cost benefit, and that's like a different discussion, right? You could be of the opinion that maybe recapture is just wrong whatsoever, and you're completely against it. But if the benefit is several million for your district at the cost of like 1 million, like, is it really wrong to say? Well, I guess if you're paying for it, it's your right to say it for sure, But if the district needs the funds, and you're getting 15 million back at the expense, or a net 15 million at the expense of 1 million, just hypothetically, is that acceptable to you? And that's the decision basically that you're asked to make as a taxpayer. So then you have to ask yourself, well, are taxes an appropriate way to fund schools? And probably yes. I think most people would agree on that. The issue isn't that for most conservatives. I think the issue has to do more with the fact that it's linked to our property, and which seems kind of like socialism, and it's essentially kind of like paying rent on your property for the rest of your life, even if you do get a tax break on it. And so how that actually plays out on a practical level, you break that down on a yearly basis, it's not so bad. But then you have to also take into consideration the appraisal values are really what drives everything. So even if a rate goes down, which we'll see later on at the very end when we start to impact things, and especially when we take into the whole tax, I guess, environment, even when rates go down, you'll see that sometimes it doesn't have the effect that you think it would on the actual amounts that you pay. But and that's kind of like the source of the whole conservative mindset when it comes to taxes. That's why conservatives and people of that perspective, libertarians too, are very, very much fiscally conservative. That's why we take the stances we do in supporting the no new revenue rates, right? Because that essentially is like saying, even if our appraisal values go up, at least it's going up equitably in favor of the taxpayer. Okay, so that's the MCR. I think we covered everything. These are just some notes I made just to math some things out. Tax data, well, covered everything we're supposed to cover. Okay, cool. All right, so we'll move on to step 2 now. See you there. Okay, so welcome to step 2 of figuring out the extent of recapture. Now that we know that recapture most likely will happen, I guess at this point we don't know for sure if it'll happen, but this will help, I guess, solidify that and tell us the extent to which it'll happen, and also give us other important details like the how much M&O collections we can expect, and the actual amounts that we're dealing with. And so this is again, I don't even know how many times I've done this section over. I'm redoing it for one, because the previous recording, just like the other one, sounded like so brain dead, because like for some reason when you're speaking and you're recording, it comes out and you do it in such a way where it just sounds like you don't have a lot of energy. It sounds even more brain dead and tired than you think it sounds, and I didn't take that into account, and so it was just really bad. And so I'm doing it over again. Plus, I said some things incorrectly, and I didn't want to. It's already confusing enough without the mistakes. I didn't want to confuse anything else more than necessary. And between that and a couple of incorrect entries from previous recordings that were still in the original recording, I just figured we'll just do the whole thing over again. So there you go. So this is the cost of recapture report. And so there's an original report that looks pretty bland. This is what it looks like when you get it from, actually, this is not what it looks like. Where's the original? Excess revenue report. That is not it. Where is the cost of recapture? Nope, that's not it either. Okay, well, you can go on the TEA website and find it yourself, but it does not look like this. It has this row. This is not adjusted, but it has two rows that say, one side says LPE, which is legislative plan something. I forget exactly what it stands for. And then the district plan, and there's, I guess they're budgeted amounts. I'm not sure exactly, but it has two amounts. One for, I guess, that's set legislatively, and the other is set by the district. And so the two should reconcile together, and that's what it produces. It doesn't have any of this color. I added this so that it's actually readable and hopefully somewhat pleasant, or at least, I guess, less unpleasant to look at. And I, removed all the dead space and, just made it a little bit better for our purposes, because I'm basically presenting this. And so that's, I added a column for my notes, column for my sources. Yep. Where did my source column go? I guess I hit it. Where are you? There you go. Let me zoom out a little bit so you can see it. Because I wanted to tell you where the data is coming from, in case you're interested. I might be the most interested person in this right now, but yeah. And here you go. We'll just go through this line by line so that we can show exactly where we're coming from on this, exactly how I came to the numbers. And so, yeah, if I'm missing anything, again, apologies ahead of time. Hopefully, just correct me where I'm wrong. I'll try to fix it. I'll do my best. And again, us accountant types, they say, you have that saying that goes, sometimes you can't see the forest through the trees. Well, we kind of live in the weeds. And so sometimes you can't see the forest through the weeds. Reminds me of that Lorax character, right? And I speak for the trees. Well, I guess I speak for the weeds. Should put that on a t-shirt or something. Anyways, compressed M&O collections. So we have our property value amounts from Rockwall County, from Kaufman County, and from Collin County. And then we have our max compressed rate. Again, this is not the proposed rate. It's less than that. It's compressed. And so we take the compressed rate and apply it to our property values to get our our compressed collections. And that's the amount that we should expect from our MCR. And so the reason we do that is because we want to break down what we get from our MCR, because that adds to our Tier 1 entitlement. The M&O collections add to our recapture. I don't know if it all adds to helps us get to the Tier 1 entitlement. But anyways, I'm already short-circuiting here in my brain. Next is our Tier 1 M&O, or sorry, Tier 2 Level 1. So our gold pennies, Tier 2 Level 1. So we have our 8 pennies divided by 100, just so that we can easily multiply it to get the collected amount, right? So we have our gold pennies multiplied by the property value. And so instead of just adding all these up, we had already done so and just plugged in the total number multiplied by the gold pennies. And that's what that formula is doing. I have some stuff over here just for kind of like a check. We have certified total just for easy copy and pasting. We have the actual formula here just to make sure it ties, etc. All right. And then our copper pennies is our district property values multiplied by our copper pennies divided by 100. And that gives us the expected collections from our tier 2, level 2, or our copper pennies. And this is the amount that I think should be, that I think is subject to recapture. And then we add all those up. This is our total collections that we can expect for tax year 2026, I believe, right? Assuming that the rate passes. And I think usually they do. Historically, the rates pass. And so that's what we can expect. And as sort of a further, I guess, sanity check, I compare this against what the district is budgeting. You can go on the Rockwall ISD budget or the website and look at their budget. And this is the amount from their budget and plug that in here. And I put that up against I just referenced the cell, right? And it comes out pretty close. We're $37,000 away, which is 0.03% off. And so it's good to know that we're at least somewhat accurate in our projection of what the expected revenue is supposed to be. So it tells us that I think we're working off of the same numbers. So everything else kind of flows from those amounts. And so at least the amounts that we're starting with, I think, are correct. I think. Again, if I royally messed this up, let me know where I went wrong. All right, moving on to our Tier 1 entitlement. So as we mentioned before, wow, excuse me, choking on myself. Let me get a sip of water here. Apologies for that, as the whole internet listens to me choke. All right, so our Tier 1 entitlement isn't based off of our taxes. But to say that the two aren't linked would be, in my opinion, somewhat misleading. Because even though our Tier 1 entitlement is based off of our basic allotment, which is calculated off of our, we'll get into that in a second. It's based off of our student population, essentially. Our property taxes are what help us get there, right? So to say that the two aren't linked, I think is a little bit misleading because our property taxes help us get there. And then the state helps us make up the difference, right? And then it's kind of offset by this allotment, which we'll talk about here in a second. And so the two things are linked in my mind. You can't have them. You can't have one without the other. And, the state funds that also help us get there are, I think, somebody else's property taxes from the more wealthier districts that add to, the state has taken recapture from other wealthier districts that provide the overall funding for the state, and maybe state budget, probably, what's the word I'm looking for? The surplus, yeah. The surplus in the state budget, I'm sure, has a lot to do with that. Speaking of surplus, by the way, the state surplus can actually buy down, especially over time, incrementally. It can buy down the entirety of the M&O side of things. So if you wanted to ever look into that, that's something worthwhile to look into. Interesting, not a problem that we can solve today with this vote. That's a legislative issue that needs to be tackled. That can be tackled if our representatives ever felt so inclined. But moving on, so this is our Tier 1 entitlement, which is based off of our basic allotment, which is set by the state. And this number historically doesn't change very often. And you multiply it by our weighted average daily attendance, which is our average daily attendance with some weights. And the weights are, there's a lot of them. We'll look at that here in a second, plus some adders. I don't think the adders are really that significant. I'm not sure what they are, and we're not going to get into it here. And so this number just comes from TEA, Texas Education Administration. I think that's what it stands for. And there will probably be some variances in the final numbers, but this number comes from the state. And so how they got to this number, I'm not 100% sure. I think there's a report that shows you the breakdown. But generally, we have they have a section of the Texas Education Code that shows you that it's 6160 plus this GYIA, which is Guaranteed Yield Increment Adjustment, which is changes every year, determined by this law right here, Section 2561, which for 2026 is $55. So you add those two things together, it gives you 6215 for this year. And then you multiply that basic allotment times your weighted average daily attendance, which for this year, we just got a report a few days ago for Rockwall ISD, should be 24,288. And I guess we have 0.339 children. It's a weighted average, so that's why it's like that. It's weird that they don't round it though, because I didn't know we could have 0.339 children. I just find that kind of funny. Obviously, it's a mathematical thing. It has nothing to do with the fact that there's like a fraction of a child somewhere. But I don't know. You got to find humor in some things, right, when you're looking at this. Otherwise, you just go mad. All right, so that's where our Tier 1 entitlement comes from. So not necessarily based off of our property taxes, but our property taxes help us get there. Our, what's this thing called? Available school fund. That's right. So this is still from the state, but it's not from TEA, I don't think. This is a constitutionally created line of funding which effectively offsets the state aid and the local share of Tier 1 entitlement. And so it's generated from the original report. You'll see the two values are the same, just like the Tier 1 entitlement is. This is also generated in the excess local revenue districts report. There might be some variances, I think, in the final amount. And so whenever you see resolutions, actually like the one that we're seeing right now, because we're into day 2 of early voting, you'll often see resolutions for funding initiatives in our Constitution. Now, one thing to note is that it's not a very fiscally conservative, like funding things through the Constitution is not a fiscally conservative thing to do, right? That's what budgets are for. It's not appropriate, really, to fund things constitutionally. Can you imagine funding things through the Constitution like that? It's just weird, right? That stick to a budget, make a budget. You should be having the legislature make a budget and stick to it, just as any other government body. Wow, voice crack. Just as any other government body has to do, especially at the local level. So why should it be any different, right? Anyways, I'll get off that soapbox. So this is our ASF allotment, which is a constitutional line of funding. And we get that allotment for this year, it's 8.3 million. Well, I guess 8.4 really, if you round up. Because, I don't know, 8.3, whatever. And then this offsets the Tier 1 entitlement, which gives our total Tier 1 entitlement. And then we need to determine the, I guess, what's the right way to say this? I'm trying to think here. Local fund assignment. So I guess the district's portion, or share, I guess, that's how they refer to it. The district's share of the Tier 1 entitlement. So you have 3 components. So between the district's share of their Tier 1 entitlement, we get this much funding, right? We're supposed to get this much funding. It might change, but the district should fund about 95 million of it. And then the state is going to fund about, I think the budget said about 65 million. We come out to, I think, 58, I think is what we, 65 million from the budget. We calculated 58 for some reason. I'm not sure why. I don't remember. I think it's just offset from the difference. And so, yeah, unless the ASF changes. So the ASF plus the state funding plus the local fund should give us, should tie to the Tier 1 entitlement, right? That's all the funding tied together. unless there's some other lines of funding that I don't know about. That could be the case. And so our local fund is the lesser of our property value divided by 100 multiplied by our max compressed rate or our tier 1 entitlement minus our ASF. So that's what's going on with this formula right here. It's taking the lesser of those two, and the lesser of those two is the same as the funding that we can expect from our MCR collections. All right, so the local portion is measured against the MCR revenue in addition to M&O collections are unknown. So you will see on the original report, there's some additional funding on top of the M&O collections. So I think there are some adders there that I just don't know about. They're not very significant, I guess, in the totality of things. But for the purposes of our estimate, we're only using line 1. I don't know what those adders are. So, I think for what we're doing, it's probably fine. So moving on to excess revenue due to Tier 1, there are situations where TEA can take away Tier 1 funding. What that actually looks like, I'm not sure. I think I tried to model a few scenarios where that would happen, and try to in an effort to try to see like what is the most likely situation that Rockwall will find itself in. And some things I was thinking about is like, could the value of property in Rockwall kind of outpace the rest of the state? Things like that. Probably not likely. Or could it outpace such that it's just much higher property values? I think things like that might cause this to happen, or maybe the MCR is so low that it could cause something like this to happen. Both are kind of unlikely, I think, but it's possible. And so I think those weird situations, which are pretty uncommon, can cause some of the tier 1 funding to be taken away. Excuse me for a second. Sorry about that. Okay. So I'm not too worried about it. What we're doing here in this cell is we're just doing the math as it's described over here in line 9. And we're asking if that results in a negative number to give us 0. That's all we're doing here. And so negative amounts are treated as 0. All right. So again, situations where TEA takes away excess revenue from tier 1 funding are kind of rare. We're not really expecting any positive amounts in this situation. And when you think about it, it kind of makes sense, because it would feel extremely bad to have your tier 1 funding taken away, because it is closely related, or at least the amounts themselves are directly tied to your student population, right? And so to take away that funding, it's like the worst, right? And they want to, I'm sure, avoid doing that unless it's just an extreme scenario. And I think that's the purpose behind it. But at the same time, balance it with, what if the district is just so wealthy that it has such an abundance of money that it doesn't make sense to have it, even though in principle I would say, keep the money. That's the conservative brain talking. It's your money. Why would you take it away and distribute it? Wealth distribution is bad. Anyways, different subject for a different day, I guess. All right, so moving on from tier 1 territory, now we're moving into tier 2, so our gold pennies and copper pennies. And this is where we're going to focus on. This is what everybody's worried about. Although I would say there's actually other things to worry about, in my opinion, but we'll get to that later maybe. So the overarching concept of is this guaranteed yield, which attempts to ensure that every school receives the same amount of funding per student per penny of local property tax collected. So we're trying to make it an even playing field, I suppose, is another way of saying that. And so this guaranteed yield amount calculation takes this guaranteed level times our weighted average daily attendance times our DTR, which we'll get into in a second, times 100, minus our local revenue. For the cost of recapture, we are coming at this, at least according to the cost of recapture worksheet that we're using here, we're looking at this from the perspective of total Tier 2, Level 2 entitlement. So we're only looking at this from our copper pennies perspective. I saw an analysis that included gold pennies for some reason, and also at an incremental level. I don't see any indication to do that in this worksheet. I don't know if you're supposed to. I didn't see anything in the Texas code that said to do that. So if that's the case, then that really changes things, because those amounts kind of matter. And we're getting kind of close anyways to that recapture point, as indicated in the previous template. And it's important to get this right. Hopefully I didn't mess it up, but it's this template, this cost of recapture worksheet says to use this Tier 2 Level 2 entitlement. And the Tier 2 Level 2, as we previously discussed, has to do with our copper pennies. And so what we're doing here is taking this formula and applying it within the framework of our copper pennies. And so our guaranteed level is the state guaranteed yield per watt per penny. And so this is incorrect. It's $55. 55. I think this was the last year's. Oops. $55 per watt per penny. So weighted average daily attendance, I have this one updated, thank goodness. We have 24,288, and then a fraction of a child. And then we take our district tax rate, but our district tax rate above the MCR. So our MCR, which is the same thing as saying our 9 copper pennies, right? Our local revenue, we already know our local revenue, which is this right here. This is our local revenue expected from the application of our copper pennies. All right, and that just references the cell. All right, and then we have the formula itself. Our Tier 2 Level 2 entitlement is this formula, and this is set in the text in the code, right, in the Texas Education Code. And we have that formula mathed out right here. We just did 9 because we want it in dollars, not in cents. Or even though it is 9 pennies, we want this in dollars. That's why we do it like that. Right? And we come out to 10.8 million. So the state is saying that we're entitled, in terms of Tier 2 Level 2 entitlement, we're entitled to $10.8 million. However, our local share of our Tier 2 entitlement is greater than what the state says that we should get, which kind of sucks. And so we just take the difference. It says take the difference between line 13, it's line 13 minus line 12. And that comes out to 3 million, more or less. So TA does not recapture the whole raw copper collections, but rather the excess over the guaranteed yield amount. And that's just a simple subtraction formula. Okay, so the rest of it is kind of self-explanatory. This is just adding line 11 and line 14. Line 11, 0, so nothing to add there. CAD cost, this is informational anyways. It doesn't add to or reduce recapture. I don't know if there's any CAD cost associated, but it doesn't really matter. This tells us the percentage. I have the wrong amount in there. Let me fix that. Do that. Do that. Do that. Anyways. Oh, and now I need to make it look nice. You see the what I have to go through here. Whatever. Good enough. Good enough for government work, right? All right, so we have the percentage of the amount that's being recaptured, that we think is going to be recaptured at least. The amount of collection, of total collections, or total M&O collections, rather, still is an INS side of it, that is applied to our bonds. The total M&O collections, and that's the percentage, so 2.5%. All right, so there's a CAD cost credit that the district might be able to apply to reduce our excess revenue. And so what that looks like, I have no idea. I'm not sure how far you can go with this and how much it can be reduced, but it's a possibility. I did look at the budget. Right now there's nothing budgeted for that. Again, I'm not sure if it's even worthwhile to do. I haven't looked into it. All right, and so at the end we have nothing to credit it against, and so it's just simply the same $3 million amount. And there you go. That's it. And now we're going to go into some takeaways and try and determine whether or not, you know, the pros and cons, basically, the case that can be made for it, the case against it, and we're going to look at, you know, what this looks like in terms of the totality of the tax environment, because that's really, at the end of the day, a lot more significant to your average taxpayer than just recapture. All right, see you there. Anyways, so let's look at the overall takeaway, and help you make an informed decision, right? It's one thing, you know, if you are of the mindset that recapture is just not good in any case whatsoever, that is your right to say that. That's one case to be made. It is basically wealth redistribution, which is not great. That's not a fiscally conservative point of view, for sure. You can look at it like that. You can also look at it from the perspective of like a net gain. There is a net gain, as we can see. The net gain, essentially, we're increasing funding as opposed to last year's rate, M&O rate, which would result in, if we go to, I have last year's as well, we impacted it. I don't have it as much updated, but this is the current rate. The current rate should result in about 102 million of collections, right? We have the current gold pennies. There are no copper pennies, but the current gold pennies are 5 cents for every $100 valuation, or valuation, not evaluation. You add all that up to get 102 million. And so going back to the difference, the difference between that is 18.5 million. And so we see about a net gain of, or not a net gain, but a total gain of 18.5 million, and which is an 18% increase from last year. If I did that right, hopefully. I think so. We just take the difference and then divide it by the last year's base amount. That's our increase. All right, so that's our total difference, and of course that's offset by the recapture, so the net gain is 15.5 million. And so basically, at the cost of 3 million, we have a net gain to the district of 15.5 million, which is a 16% increase. And so if that's acceptable to you, so the con would be that we redistribute, am I saying that right? Oh gosh. We redistribute. Oh my gosh, I'm having one of those things where like your brain doesn't say the word right. That's fun. You reallocate 3 million to give it back to TA. They give it to less wealthier districts. I don't know, somewhere in the Panhandle or something. And they give it to districts that need it. Maybe it goes, maybe it helps them meet their basic or their tier 1 entitlement, or something along those lines. And yeah, and we in turn, or Rockwall, I shouldn't say we, because I'm not part of that, but Rockwall gets an additional 15.5 million from last year. So there's that case to be made as well. All right. Again, we're talking about the operation of our school, and you have to also balance this with the needs of the district. Anyways, so wanted to impact it on a home value from the rate, with the rate rather, of the proposed M&O, compare it against the current M&O, and show you the difference. So we just take the rate, divide it by 100 so that we can multiply it and by a home valued at 300,000. I think that's a fair assumption to make for homes that are in this area. Just an average home, right? Kind of on probably the low end of Rockwall County. Rockwall County is a fairly wealthy county, and so that would result in a 2.4 thousand yearly tax for just this part of the tax, as opposed to 1,850 for a difference of 510. Break that out monthly, it's an increase of $42.50. So we consider the cost benefit that, and this should be balanced, of course, with the needs of the district. All right. And that's what we're going to look into right now. So I'm going to try to go through this as quickly as possible. But first, wanted to show you the taxing units that are applicable to Rockwall County. Most of these are not used. The main ones are going to be Fate, Heath, Royce City, the Clinton Chisholm, Rockwall. And of course, you have the MUDs. We got Rockwall County, of course. And then this CAD. CAD's applicable to all of them, but it's 0. So I don't know why they throw that in there, but it's in there. Maybe they had a rate to begin with to fund the actual CAD itself. I don't know. It's in there. You see all the MUDs. The rates are the same, and they don't really change, which kind of sucks. So if you live in a MUD, I'm sorry. But it's not as bad as living in a PID, I think. As mentioned earlier, well, I don't know if I mentioned it. I know I mentioned it in a different version of the video that I might have deleted at this point, because it sounded very, like it was just bad, and I had to redo it. The PIDs are sort of an unknown. They're an unknown. I don't have the time. We're already in day 2 of early voting. I wanted to get this out just to share, do something for our neighbors over in Rockwall. The PIDs are unknown. We just know that it's going to be higher taxes. PIDs are essentially bonds on property. What stinks about them is that I think they're more sensitive to, even though they're not true rates, they're fixed amounts. They incur compounding interest, and so that's fun. It would almost be better, I think, if they were actual rates. And so because of the compounding interest, I think they're sensitive to increasing, or I think they're more sensitive to increases than typical rates are. And you can convert them into what a rate would be, I think. And I started to get into how you would math that out, but that's going to have to be a whole separate project. And what's bad about them is just the level of disclosure. It's hard to find information, and it's a lot of work just to get just one community's, just enough information in order to do any of that, right? And so that's going to have to be a separate project. Here's the impact analysis. We don't want to use appraisal values, or I'm sorry, we do want to use appraisal values. We don't want to use listing values. I thought about doing that. So using something like Zillow isn't going to work. You can find an index of appraised value. I keep saying appraised. You can find an index of listing values off of FRED, which is a useful index from the Federal Reserve. You don't want to do that either, I think, because just because a listing price isn't really indicative of true appraised values, because what if we're in an economy where people are not selling their homes. Sure enough, I look on Fred, and we're in a downturn on the transaction of home sales, right? And we know also that property values are going down, and that also isn't reflected in listing prices, because when people are selling their homes, those homes that are being sold, those homes are more expensive, which for obvious reasons, not a good sign. And so thankfully the CAD provides the actual or the average taxable values, which is good, because you can go on the CAD's you can go into the CAD's information for Rockwall ISD and grab that info, and it also automatically reflects the homestead. So you can use the average taxable value for that year, which should reflect the homestead exemptions applied, right? Because we're dealing with taxable value, not market value. All right. And so we didn't have 2026, right? Because we're not there yet. I'm not from the future. And so we had to project it. And in order to project it, I thought it was reasonable to use 2023 through 2025, because I wanted to capture this dip, right? If we didn't capture it, we made it look like as if home values or appraised values, taxable values, we'll get it right eventually, taxable values are going up. I think that should not be reflected that way, because we pretty much know that even though it's up for a vote, that the homestead exemptions are going to pass. They always do historically, right? It's not going to not pass. We're not going to vote against ourselves on a tax break, right? And the legislature meets every 2 years. So we want to reflect the fact that we're going to see homestead exemptions in the next year. There's still going to be some movement because of appraised value, so we want to capture that as well. And so we don't want to take the entire average and sort of, skew everything and add in all the other, applicable homestead exemptions, right? So I think it's reasonable to take, was it 23 through 26? We get some of the homestead exemption that is not applicable to 2026, but I think doing it any other way didn't give an expected result. So I think for our purposes, it does show a slightly decreased taxable value, which I think is pretty reasonable. All right, so that's what we're doing. And so now that we have our taxable values, we can actually apply neighborhood by neighborhood. You see how Rockwall ISD just makes up one out of several taxing authorities or taxing units. However, different areas call them different things. I've always called them tax authorities, whatever. It doesn't really matter. But obviously, the ISD makes up the largest portion of that. You have a city, you have, I'm not sure why I have the city of Rockwall and the city of Fate in Wood Creek. I might have to double check that one. Weird. Sorry about that. Anything else crazy? I don't know. I guess we'll see when we get there. So the ISD, like I was saying, makes up one of four, unless you live in a mud. One of three, really, unless you live in a mud or a PID. I don't think you would have both a mud and a PID. If you do, I'm sorry. But yeah, where you live matters, because the number of taxing units. And so Rockwall Appraisal District, there's no rate applied. City of Fate, you pay taxes to the City of Fate, you pay taxes to the mud, you pay taxes to the ISD, right? And so for the reserve at Chamberlain Crossing, you pay taxes to Fate, mud 7, Rockwall ISD. And so total amounts differ, of course, right? But the overall percent change, which is what it's not labeled, it should have labeled it, but the overall percent change between pretty much every neighborhood tells more or less the same story. Yeah, but as you can see, the total amounts differ, and it's the main driver for our property taxes are the appraised values. And then you can see our appraised values don't stay the same. They go up or down. And so sometimes it doesn't matter that your property taxes go down, that your rate goes down. Sometimes it's because the rest of the rates go up. Sometimes it's because your property, most of the times it's because your actual property taxes go up. What this looks like on an individual level, of course, is going to be different. We're going off of average taxable values. So this is reflective of everybody's taxable value, but we're still working off of only single family homes. So only home type A, if you want to look at it from a CAD home type, I guess, code that they use for the types of different, I guess, housing. But this is only type A, right? So it's definitely more applicable to the school's taxable values, but still, right? Individual levels are going to look different, right? And especially if your home value is different, significantly different. But for our purposes, I think this is just fine. All right, so there you go. Chamberlain Crossing, we're looking at much higher taxes than somebody on Wood Creek, even though the average taxable values are the same. Here is Royce City ISD by comparison. Of course, we got City of Fate, Rockwall County, Mud 9, unfortunately, which not fun. And then Royce City ISD, about the same, maybe slightly higher taxes, which not fun also. The Meadows at Morgan Creek, Phase 2 Royce City, and I'm not going to spend much time on Royce City. We're here for Rockwall ISD. All right, so Wood Creek, Phase 2, Mud 8, taxes reflected there. And I suppose you could always stop the video if you really want to look at it, or just do what I did and figure it out for your own neighborhood. I tried to be give a wide dispersion of areas, but there's a lot of commonality too throughout Rockwall County. So I didn't want to go too far and do try and do every neighborhood. That wouldn't be useful for our time. Williamsburg in Fate has a PID, so we know that it's at least this amount, just higher. Which sorry for Williamsburg. No double cities in here is what I'm checking for. All right, Fox Chase. So Fox Chase and the nicer, I guess, areas. I bumped these values up by 100,000 just because it made sense after looking at the neighborhood for like 2 seconds. So I'm like, oh, Fox Chase. I feel like I should be talking in a British accent when I refer to Fox Chase, and so we're bumping these up by 100K because there's no way there's a house that is within these average ranges. It's not reflective of the neighborhood, and so I wanted to reflect that. The same with Keenes Acre and McClendon Chisholm. I don't know, Sonoma Verde looked pretty nice too. All right, so that's what's going on with these. Still on a percent change level, it's not much different. So there you go. Fox Chase, taxes, Keenes Acre and Heath, and then Sonoma Verde, taxes. And that's the impact. As you can see, basically taxes start to rise between 21 and 22. They go quite a bit up in 23. They go down again quite a bit. Well, about by half in 24. Go up a tiny bit in 25 across the board, and are expected to go down again in 26 by a little. So it's kind of like in the overall landscape is kind of an ebb and flow. And we have that summarized over here, which hopefully I didn't mess anything up by removing those few lines over there. But in terms of per rate, or rate per $100 valuation, we have the rates here. Excuse me. So we see just the rate percent change just for Rockwall. That's SRW is the CAD's code for Rockwall ISD. We see the percent change just for Rockwall ISD, which almost 3%, almost 5% downward, almost 16% downward, and then goes up a little bit, and then goes up by 3.9%. Everyone's expecting this. This is what we focus on. This is what we talk about. But we see a different story when it comes to actual dollar amounts, and these are the average dollars just for Rockwall ISD, just only in the neighborhoods that we looked at, granted, right? It's not all neighborhoods in all of Rockwall County. That would be crazy, but it is reflective of a pretty decent sample, I think. And it's not going to change much percentage change-wise, right? So when you consider the percentage change of these taxes, the actual amounts that we pay, we see even though the rates go down, we see on an absolute value viewpoint, the amount that we pay goes up. And the reason that happens is because the home's value goes up, right? Their appraised value. And so even despite our homestead exemptions and the protections it gives, it's not really enough to that a exemption is going to protect us from even a decreasing school property tax on the M&O side or on the INS side. All right, so that's what I wanted to show here, and it does go down eventually, which is good, right? Not to the same magnitude, but it does go down, and then goes back up again. If I can talk, goes back up again and goes back down. All right, so as it relates to the absolute values, and again, this is only for neighborhoods with Rockwall ISD involved, I think. Let's double check it. Okay, I think we're looking good. Oh, yeah, okay. All right, so when you look at only those districts that have Rockwall ISD involved, but you take in the totality of the entire tax landscape, we see basically the same story being told. So at least the total landscape of our taxes reflects the school's percent change in terms of what we actually pay, which is good, I think. At least these two things are aligned. It stinks that it's not also aligned with the actual percent change in rates. I wish they followed together so that we always enjoyed, or that Rockwall ISD taxpayers always enjoyed the savings whenever the school, just gave a lower rate. But that's, as we can see, not always the case. All right, so that's about it. I hope you got something out of this. Hopefully you learned something. I know I learned a lot looking at this. Been looking at it for about a week. Hopefully I got it mostly right. And if I missed something egregious, let me know. Hopefully this will let you make the most informed decision. Again, you need to balance what's acceptable to you with what the needs of the district are. We need to fund education, of course, right? You need to look at some other things that we haven't even touched on. And we're not voting on a bond, but some things related to the bond matter in terms of like fiscal responsibility, or bonds in general. I shouldn't say the bond because we're not dealing with the bond, but like, is there any outlying bonds that we're still paying on for things that no longer exist? Like, that's probably the biggest one, right? And if and if there are, that kind of stinks. And so that would be an indicator, at least in my mind, that we need to tighten things up fiscally as a district, even though we're not voting on a bond. You also need to keep in mind we need to pay teachers more. Maybe looking at the ratio of administration to teachers. I don't know. We need special education. We got to fund it. So all those things matter. We have to pay for our schools. It's good that Rockwall ISD is, funding itself, and that they are such a wealthy district that essentially we're having money taken away, but at a net gain. So, like I said, pros and cons, keep all that in mind, and go vote. Have a good one.